countries at this point, for the last several years, have been accumulating gold at the fastest pace, in recent history. And the reason being, they understand that there's going to be either a dollar devaluation or a dollar implosion. So what they're doing is they're filling their balance sheet up with gold. It will naturally get revalued higher when the value of the dollar drops, because if it takes more dollars to buy a cup of coffee, it's going to take more dollars to buy an ounce of gold.
The recent spike in gold prices is more than just a market trend. It signals a significant shift in the global economic landscape, largely fueled by the weakening US dollar. With the dollar recently dipping to a 7-month low, primarily due to expectations of looser monetary policy from the Federal Reserve, its purchasing power has diminished. As the Fed potentially increases the money supply, each dollar buys less, driving up gold prices and reflecting broader inflationary pressures. Legendary analyst Bill Holter underscores this trend by noting that central banks worldwide have been stockpiling gold at unprecedented rates. This strategy safeguards against potential failures of fiat currencies, including the dollar. In 2023 alone, gold investments surged beyond 2,000 tons, setting a new record. If the dollar continues its downward trajectory or faces significant devaluation, the price of gold is expected to rise further, as more dollars will be needed to purchase the same quantity of gold. Holter also draws attention to tapping into the US's vast gold reserves, which have not been audited since the 1950s, but are estimated at around 8,300 tons. A proposal suggests revaluing this gold from its historical price of $42 per ounce to a more current market value, potentially around $2,500 per ounce. This revaluation could unlock approximately $600 billion in capital, signaling a move toward integrating traditional assets like gold with modern financial innovations, including cryptocurrencies. Amidst gold's rising prominence, silver is quietly gaining traction, particularly in industrial applications such as solar panels and other green technologies. Global demand for silver is projected to reach 1.2 billion ounces in 2024. Driven by increased industrial use and a rebound in jewelry demand. However, the actual demand for green technologies may be significantly higher than official estimates, possibly due to understated figures by organizations like the Silver Institute to conceal a growing supply deficit. We will present clips from Bill Holter's latest interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
Yeah, I'll start with the price controls Kamala Harris is talking about, because that's the easiest one. Price controls have never, ever, ever worked in all of history. It's basically communism. And what happens is once you put price controls in, you start to get inflation. And once the cost of making something goes above the cost that you can sell that item for, it doesn't get produced anymore. So price controls will only lead to supply shortages. I mean, that's what it's always done, and that's what it always will do. J.D. Vance devaluing the dollar. I mean, that's a short-term fix. It's basically admitting that, you lost the war or lost the battle. And devaluing the dollar, I mean, there's many different facets to it, but it is definitely inflationary, and it definitely will hurt the central banks that hold treasuries as reserves, because those will immediately go down overnight as soon as the devaluation starts. And once you have countries at this point, for the last several years, have been accumulating gold at the fastest pace, in recent history. And the reason being, they understand that there's going to be either a dollar devaluation or a dollar implosion. So what they're doing is they're filling their balance sheet up with gold. It will naturally get revalued higher when the value of the dollar drops, because if it takes more dollars to buy a cup of coffee, it's going to take more dollars to buy an ounce of gold. Well, from official sources, it's probably very close to zero because they understand how small that market is. You're only talking about a $20 billion market. That's global production roughly. So a country wants to move in with a billion or $2 billion to buy silver, they blow up the supply and demand equilibrium. So I mean,
Yeah.
they would basically shoot themselves in the foot. There's no room for them to come in, and I can't read it. It's too small on my screen. Um, but what's not being talked about, or what's not even really being fully reported, is how much silver has been used and is being used in solar and green applications. I mean, that's way more than what the Silver Institute talks about. And I mean, they have to do that to show that, the deficit's not as big as it really is.
Many analysts are sounding the alarm about a looming collapse in the fiat currency system, which threatens to undermine global financial stability. As trust in these currencies erodes, the value of government-issued treasuries is increasingly at risk of severe devaluation. Experts like Bill Holter suggest that central banks might soon need to revalue their gold reserves to address the financial shortfalls created by failing fiat currencies. Holter envisions a multi-stage economic reset, where the initial focus would be elevating gold valuations to cover the gaps left by depreciated fiat assets. However, this adjustment might not be sufficient, as even central bank digital currencies are tied to the unstable fiat framework. Holter also foresees a more comprehensive reset involving realigning asset values to reflect their true market worth. He speculates that gold prices could need to rise to around $125,000 per ounce to match the current US debt, assuming current gold reserves. This potential shift could signal a major transformation in global finance, with gold playing a crucial role in stabilizing the financial system amidst widespread currency devaluation.
There has to be because the fiat is going to collapse, which means the debt structure collapses. They have to have uh, the gold that's on their books, they're going to have to revalue higher to fill up the holes that are created by defaulted or much discounted treasuries of various sovereign countries. I mean, he heard things, and basically, in the end, it was a speculation. And he thought that gold would be revalued higher by governments during the first reset. And that really doesn't do anything because it does not eradicate fiat. And even a central bank digital currency is still fiat. So once that fails, and he didn't think it would take much more than maybe six months to a year to see uh, that fiat system fail, then you would have the real reset where derivatives across the board fail and all assets reset versus each other to true clearing price. And
Okay.
if you go back, I mean, this was 5 or 6 years ago, he was talking about $50,000 gold. And I pointed out to him that just to cover the on books U.S. debt at the time, like I said, this was, say, 4 years ago, um, the number had to be 125,000 ounce. And that's assuming, again, the BRICS basically were formed because that group of nations wants free and fair and honest settlement. And the way it has been is that they ship real goods to the United States and we ship them dollars. The dollars are basically nothings because the Treasury and the Fed can print unlimited amounts of dollars to make payment so they don't default, but they have no value. So yeah, I mean that's why the BRICS originally that's why it started because you had nations that wanted to move away from the dollar. And if you go back to October of last year, you had gold at $1,700 an ounce. Now it's over 2,500. So that's almost a 50% move. And that move started one day after the U.S. said that they were going to confiscate the $300 billion of Russian treasuries. You had, I mean, you got nations all over the world looking at Russia as the strongest military, thinking, well, hey, if they can do that to Russia, they can do that to us. So that's why they're scrambling to gold.
The recent surge in gold prices reflects a profound shift in the global economic landscape, driven by the weakening US dollar. Analysts forecast that gold could reach $3,000 per ounce by this year, particularly as the US Federal Reserve's upcoming meeting approaches. Concurrently, silver is expected to see substantial gains due to rising demand, aligning with gold's upward trajectory. These developments indicate that precious metals are poised to be crucial in navigating future economic uncertainties. Share your thoughts on Bill's prediction in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.